So what do you think, Nick, separates the top brokers, like ones doing 10 plus deals a year from those that are just, getting by with closing one to two deals?
That's a good question. I think it's persistence is
Mhm.
one, patience is one, thick skin, because in a business like this, the benefit that I saw early on was unlike selling a house, you might have a client that's once or twice in your life. But with investment real estate, I quickly found that good contacts, good relationships can lead to multiple sales.
All right, welcome to Ladders and Leverage, the podcast where we break down real estate investing with a clear focus on strategy, execution, and building long-term wealth. Whether you're scaling your portfolio or closing your first deal, we are here to cut through all the noise and bring you actionable insights from real operators in the field. I'm Danny Lampert with my co-host, business partner, wife, Marissa Buss. Today, we're here with Nick Henry, number one apartment broker in Ventura County by number of transactions. Nick has specialized in apartment building sales since 2007, focusing exclusively on multifamily markets in Ventura and Santa Barbara counties. And over the course of his career, Nick has closed more than 250 multifamily transactions, totaling over 350 million in volume. So Nick each year handles anywhere from 15 to 20 transactions with an annual sales range of 35 to 50 million. He specializes in 5 to 75 unit apartment buildings and is widely recognized for his consistent deal flow and long-term relationships in this market. So Nick, not only does he sell apartment buildings, he's a real estate investor himself, owns multiple properties, and when he's not negotiating deals, he's out there mountain biking, surfing, coaching youth sports with his wife and three sons. So in this episode, we're going to dive into how Nick built his career and what separates top brokers from the pack and how investors can really stand out, and what's happening right now in Ventura County multifamily market. So let's get into it. Nick, thank you for joining us today. Glad to have you.
I appreciate the nice intro. Great to be here with you guys.
Nick, so how did you get into real estate and eventually start diving into multifamily?
So I moved to Santa Barbara with my then girlfriend from Santa Cruz in 2007, and I decided I needed to get a real job. So I had an uncle that was in real estate development, and I liked the idea of real estate. I liked the idea of being a self-starter, being an entrepreneur, having a flexible schedule. So in order to get my start, I started in property management, and it was not flexible. It was not entrepreneurial. Every day was the same. I had probably the best boss that I'd had to that point in time. But after 9 months, I said, you know what, I'm ready to take on some risk. I want to get into real estate sales. And so I found myself through a high school friend working at a apartment sales focused firm where I trained.
Right on. Okay, so so you started off in property management and then jumped into multifamily. I mean, Marissa and I both got our start in real estate, cold calling for a big commercial broker in the Valley. So what did you do when you first got into that side of
I'm
it?
curious because in the Valley we had the apartment book, or the book of gold, we called it, that we used to go through. But Ventura County, there wasn't an apartment book. So how did you?
So when I came on, it was an interesting time, by the way, because it was 2007.
Yep.
And at that time, it was pretty much the peak of the market. I was getting my feet wet. And mostly, I worked for an experienced broker. I was brought into about 5 listings. So I would go to showings, I would go to property inspections, and I was trying to figure out what to say, what not to say. If a client had questions, I didn't want to put my foot in my mouth. So I was just kind of trying to pick up the business. And what I was told was, before you start cold calling, understand your market. And so I spent a lot of time. I would go down to Ventura. What's the difference between the Avenue and downtown and Montalvo and Pacific View Mall. If you go to Oxnard, is North Oxnard the same as South Oxnard? And so it quickly became pretty apparent that if I saw a fourplex in South Oxnard versus one in North Oxnard, that one was not the same as the other. And so before I got on the phone, I had to be able to talk to clients with knowledge and kind of understand that. So that was the first thing. And then the next thing was trying to learn the numbers. How do you underwrite a property to be able to tell what the true number is? Because sometimes it's presented in a way that is not reality. And so you have to really kind of go through the numbers, understand what it is today and what it could be once it's improved.
Yeah, it's so interesting because mine was so different.
I know, same.
Mine was, here are 3 questions. Here's this book. Go call everyone and ask these 3 questions. And then I would come in and be like, I got one. I got a lead. Like, this is great. They want to sell for like an 8 cap or a 6 cap. And he's like, yeah, no, that's not even feasible. Oh, okay. And then I would go back. And then it was funny with the numbers and underwriting because he would be like, okay, you need to make sure though that like they didn't run their kitchen remodel for their personal residence through this and that these are true numbers of the actual expenses. And I was like, oh, okay. Like this. Yeah. So I guess maybe because the Valley, San Fernando Valley was so big and that's what I was calling. It was like, you're just going to call and see if you can find someone who's halfway interested.
And one thing that I quickly found too, that I think our background was a little bit different, was that the model in Ventura, Santa Barbara County, it's sort of a small town. A lot of people are laid back. So if you're a Marcus and Millichap, Valley or LA or San Francisco, big city, it's very much a pressure cooker situation, and that translates to the cold calls. But I found that the people that I would call didn't like that approach. And they would sometimes say, I had 4 people from one company call me in the same week. And they all wanted a sale, which was clear, but they didn't really ask me what were my goals, what was I looking for, what's the type of property that I was interested in. So I tried from an early on philosophy to be more of an advisor than a typical sales agent where you're kind of forcing the issue.
Yeah.
That is, I mean, like such different schools. Ours was like, get on the phone, make calls, and then, but he didn't train us really. It was just more like, get us the lead and we'll get,
it was all numbers. It was a numbers game. You were going to burn through so many calls and so many people, and you were just looking for that one yes. And it was just like this needle in a haystack mentality of just on the phone, constant. Yeah, there was no worry about like relationship building from what like our senior broker was telling us. It was more a numbers game, and you were just going to smile and dial until you found someone who was like a legitimate, really wanted to sell. So
yeah, and I think that's interesting for people that are getting into the business. You don't have a bunch of contacts, so it's easier when you have 20, 30 contacts. You can say, hey, I know who's going to buy that deal. If you're new, you have to develop that.
Yeah.
But nobody loves cold calling.
No.
But in commercial real estate, you have to do it.
Yeah.
And so it's just something you have to kind of get through, figure out your style.
So what did you do like in the beginning? Like what was the early hustle like for you to kind of get going?
So again, being that I started in 2007, by the time I somewhat knew what I was doing, it was fall 2008.
Okay.
So, we're getting into July, August, and our firm we had 10 listings, and Bear Stearns hit, October 2008 hit, and I'll never forget because from that moment forward, we had a whiteboard in the office and we had the listings, and every week to every other week, we would reduce the price. Mm-hmm. Nothing was selling. And at the time, the bills were stacking up for the owner of the company. So there was stress, and agents were feeling it, and ownership was feeling it. So at that time, I was making a lot of cold calls, but I felt like as a new agent that it was difficult to get an on-ramp with new clients and get traction, because people are saying, Nick, I'm not buying anything. Have you seen the stock market? Everything's blowing up. I'm going to wait and see. And so it lasted like that for a while. As we all know, the fallout took some time.
Yeah. The people in our office in that time, I remember they started selling notes. Did you guys ever get into that?
We did not.
Yeah, it was really interesting that one of the guys somehow like figured that out and then had a connection to some asset manager, and they started selling the notes and then to other investors to buy over these notes from these buildings. And that was when I was like, okay, I think my time in commercial is done. I have to move over to
Good
residential.
time to exit.
Yeah.
So for some
yeah.
of our listeners that may not know a notice, what is that process?
So it's like a first trust deed. People were buying, like the banks wanted to offload these notes off of their books, and people were buying them as investments in different like loan to value ratios to try and see if these people were going to keep paying or if they were going to get to foreclose and take that building. So yeah, it was, and they were struggling to figure that out and what have you. And it was just like, okay, this is getting crazy right now.
So what about, do you remember the first deal you closed and any learning lessons from that deal?
The first, well, there's sort of a two-part question. So there was the first deal that I closed that was a lead given to me by my boss that I helped. And it was a 7-unit property by the beach in Oxnard Shores. I was happy to be, kind of working on a property that was pride of ownership, that was near the beach. And I, went to the property inspections and I didn't really know how to do it. The keys didn't work. We had to get in, and it's the classic thing is everybody's there. You've got a home inspector, you've got a buyer, everybody's there. I can't get in. The tenant's not home, and they're looking at me, and I'm 25, and the buyer's 50, and he's like, "What is this kid doing?" And so we had to call a locksmith, and we figured it out, but it wasn't pretty. And that same type of thing happened 2 or 3 times where we visited the property. Have to get the tenant estoppels from the tenants and the paperwork, meet the appraiser. So I learned a lot. I wasn't very good at it, but I learned a lot. And then kind of the second part of that answer is relatively shortly thereafter, I left and joined a small company in 2009. And the first deal I did there, I'll never forget, because at this time, 2 out of every 3 sales were either short sale or bank owned.
Mm-hmm.
And so at this point, I was trying to develop clients. So I was working with school teachers, people not with a lot of money that recognized an opportunity. And so I would go down, meet them at their house, at Starbucks, wherever, meet them at the property. We would look at 12 different places, and Blackstone or some big investment company would come in, pay 5-10% over, all cash, done deal. And finally, after making 12 offers, a school teacher got her offer accepted, bought a 4-plex in Oxnard for, I think, around $500,000.
Wow.
Oh my gosh.
And I didn't get paid very much money.
Yeah.
And I think I had to give up some of the commission, and the bank was very difficult to deal with, but I got through it and I felt a sense of accomplishment.
Wow.
And I said, I think I can do this.
Yeah.
Does she still own it?
She still owns it.
Oh, good for
She
her.
does. She still
Wow.
owns it.
Yeah.
20 years later.
How
I know.
cool. So what do you think that separates the top brokers, like ones doing 10 plus deals a year from those that are just, getting by with closing one to 2 deals?
That's a good question. I think it's persistence is one, patience is one, thick skin, because in a business like this, the benefit that I saw early on was, unlike selling a house, you might have a client that's once or twice in your life. But with investment real estate, I quickly found that good contacts, good relationships can lead to multiple sales. So I've had clients that'll do 6, 8, 10, 12 transactions. And so that helped sustain me early on. But also, it was really a mix of developing new contacts, making sure you keep the existing ones, and cold calling, and just not getting down, because I'd have moments where, you guys have been in this, where you think you have a sale, you've been in for a month and a half, something goes haywire.
Yeah.
Oh, yeah.
And you're telling your wife, you're like, I don't think I'm going to make a paycheck. And she's telling you, maybe you should go bartend on the weekend or make some money.
Yeah.
Yeah. No, that's so true. And what really stands out to me is that when I hear how important it is really just like get in the game. So many people think they want to just wait until they're ready. But the truth really is like you learn by doing, and that's been a big part of our journey too, right? It's just doing.
Well, we were like, oh, we're going to get back into commercial. I was, working in residential, trying to save up money. And we're like, we're going to buy an industrial building.
I remember.
We were like, that was like, because COVID had hit, and that was like the strongest sustaining asset class. And then I was like, it's also the most expensive. But then we kind of got pushed into multifamily because of 2021 selling 40 houses, and I had to our CPA was basically like, you're either going to pay a bunch of money to the government or you need to buy a building and do a cost seg. And that's how we bought our first building. It wasn't that we wanted to buy multifamily, but I felt more comfortable with multifamily in a way because having worked in residential and done so many leases, so it worked out well. And then so I think we were forced into it with the tax consequences of that year, but a lot of people do, like, they don't want to, and it's nerve-wracking buying your first deal, no matter what, and getting used to it and figuring it out. So,
And so if I want to segue a little bit, so I want to talk about building relationships with owners. So you're one of the most, active brokers here in Ventura County. What is your strategy for building relationships with these owners? Because you constantly have deal flow, sending us deals and this and that. So there's got to be a strategy behind that.
So at this point, I think I have about 700 investors on an email list. And so I've always found value in an email newsletter. And at this point, some people prefer text, but I still use a lot of email newsletters. I still do a lot of print advertising. A lot of real estate companies I think are getting away from that, but I think it's effective. So I'll probably spend $10,000, $15,000 a year solely in postcards. And it's funny, in a market like this, every year I'll get one, maybe two retirees. They'll say, I have this postcard of yours from 8 years ago, and you sold this 15-unit apartment building, and will you come tell me about mine? And so those two things have been key for me. And it's funny, as you get older, you get married, you have kids, you're coaching Little League, contacts come in. And so just through the course of every day, people are aware of what you do. And so I've been able to get, actually, many of my friends have bought investment property in recent years as well. So that has played into it. So I think I guess the short answer is it's not one thing. I have consistently cold called.
You're still cold calling?
I'm still cold calling.
Even
at 20 years in, I think you have to. But I cold call, I send out postcards, and I, feed that into newsletters. I think, again, trying to provide, and I'm not always good at this, but trying to provide information. So right now, if you're a landlord, keeping up on legislation, as you guys know, is really hard. There's rent control from the state. There might be rent control locally. There's changing rules about security deposits. There's changing rules about can you ask a tenant to vacate based on the condition of the property, which you guys well know. So I think being able to be a source of information for other investors that maybe feel overwhelmed, and also being able to provide access to good property managers, because it's not the business that it was when I first got into it. Based on the amount of new legislation coming down, I think a lot of people, benefit from keeping on top of things.
Yeah,
for sure.
And I got to give you kudos for that, because we're talking 2 days ago, you text or you called us, and because we were looking at that building in Ventura, and you're like, oh yeah, I'm watching the YouTube of today's council meeting because they're talking about the Rent Stabilization Act. So so what did I do? I went and logged in and watched it. So that value, is huge. That is awesome to keep doing that, for sure.
Good.
Yeah. So I have a question. So for newer syndicators, right, we try to reach out and build relationships. That was part of what like Danny's job was when we were delegating out what we were going to do. And I get calls sometimes in residential where people want, they want a wholesale, or they want to like, they take some sort of investor seminar, and now all of a sudden they want to reach out to real estate agents to try and invest in single family. And for me, I have my qualifications of who I'm going to work with and who I'm not. But yours, I'm curious, like, how do you know when someone's calling you up, if they're legit or not, and if you're going to give them any time or not?
Right. That's a really good question. I think in this business, you find that there's real buyers and there's those that are going to be a little bit more difficult. And so I think I cold called you guys. I'm trying to remember how we first
Danny
got into contact.
Danny called you.
I was
You called me.
Yeah.
Okay, so that's
we
the good
looked
segue.
at, we knew, we were like, okay, let's look and see who's selling the most. And so that was pretty much, and Danny was in charge of like contacting, I don't know, it was like 5 or 10 different names.
Yeah. So I pulled a list.
You cold called me. I love it.
Yeah.
I pulled a list of, just the recent sales and this and that. And my mentor was like, this is the keys that he told me is like, you need to make that initial contact. And, mine is something simple like, hey, I mean, at the time it was different, but at that time I'm like, hey, I'm new to this. We just bought our first building. We're looking to grow and expand. And I wanted to, say like, I know you're not going to send me, like, I haven't met you yet. You're not going to send me your best deal. Yeah. So I go in with the mindset of like, hey, I know you got your list of buyers that you're going to send it to, but maybe there's a deal out there that they're not interested, that needs a lot of work, this and that. So like that strategy. And then he said, make sure you follow up. So it was literally every 2 weeks, I would follow up with like a text. Hey, do you have anything?
Yeah, I remember that now.
Yeah, to keep it going. And then, I mean, I've been talking to you for 3 years, and then we finally just put our first deal together last year.
Yeah.
And then we just we're doing another one now.
Yeah.
So yeah.
So now you're taking us seriously.
Yeah.
Here I am.
So do people cold call you like I did, like as a buyer?
Yes, actually. So syndicators, quite honestly, are some of my favorite groups to work with. Why? Because you guys are obviously very well educated in the business. You're real estate agents. You understand finance. You understand underwriting. So generally, the syndicators that I have worked with have a really good understanding of what works and what doesn't work. And for a syndicator, you have an added burden, I think, and responsibility to provide value, to provide return, to provide upside to clients. And so that, from my experience, bakes in a confidence on your end where you might say, hey, I can't guarantee every deal is going to pencil at a market rate, but the ones that we commit to, we will close on. And it quickly became apparent with you guys, and is the reason why, now you're probably my first call on things like these deals, because I know you guys are going to do it.
Yay.
You guys do what you say, and that makes a difference because reputationally, if you have a listing, or even if you don't have a listing, you see a great deal like 28 units in Thousand Oaks, and it comes on the market and it's rare, and you know that you have one shot at it, where the agent kind of controls the deal for the listing agent side, I should say.
Yeah.
So you have one shot at it. If you are an agent looking to represent a buyer, you need to have confidence that group will step up, perform, and ultimately be able to navigate the transaction. And so it's interesting now. I think I've worked with, like I said, 5 different syndicators, and each of them have a little bit of a different model.
Yeah.
One of the reasons I love working with you guys is, number one, we're all kind of more or less the same age.
Yeah.
We have kids, we have interests outside of work.
Yeah.
And so I appreciate that. It's fun just talking with you guys outside of real estate. But I think probably maybe the secret sauce that you guys have, and one other syndicator that I've worked with, that some of the more conservative companies I've worked with in the past, is you guys are a little more aggressive in terms of what's the upside play? Can I build ADUs? And not everybody's comfortable with that. One thing I've been really impressed with Danny's family, I know there's a big, deep construction background.
Yeah.
So on a transaction that we are working on currently, I thought it was amazing to see the due diligence day. Okay, we're going to kick the tires on this thing. Who's going to show up? We had about, what would you say, 15 people
Yeah.
during due diligence day.
Yeah.
And, your brother's there and your father's there. And I think that translates to incredible value for your investors, because you're not farming out to a contractor that's going to charge you, market rate prices in a time of escalating construction costs, but you have already a baked in advantage where you can get things done. You have the ability and the knowledge to do things that other people can't. So if you're an investor putting your money in with you guys, then I think you benefit in those cost efficiencies.
Yeah. Remember
that's
when
cool.
we used to bring our general home inspector?
Oh, yeah.
Oh, yeah. We residentialed it for a while.
Yeah.
We would like do a full general inspection and like a termite inspection. And sewer.
Your window screens are torn. And
Yeah.
this water heater is
Oh,
not
yeah.
braced. And,
Yeah. No,
It was so funny.
and it's a lot of good points there. But even though I use my dad for a lot of the construction, not everything. But example on this deal that we're doing right now, the renovation budget is, what is it?
For just the renovation,
just
1.5.
1 point.
It, well,
Yeah,
3 million.
1.5.
Yeah.
And I said to him, I go, hey, if we can't get this down $160,000, I'm gonna be bringing this to other contractors. And 2 days ago, he calls me and he was like, hey, I'm able to meet your budget.
You should have said more.
But no, that's the thing. It's like, working with him is, it's my dad. The trust is there. But he even knows, like, the framer. I'm good friends with one of the framer that he gets business from, or that he gives business to. He's like, dude, you're trying to get your dad lower, this and that and this.
Yeah.
I'm like, no, but my dad gets it, I get it, and so that it really works for us doing it that way.
Yeah, and I think you clearly have an understanding of construction.
Yeah.
And I think you have to really be skilled in a lot of areas to syndicate a deal. I mean, I've never done it. I've worked with guys like you, and I have a lot of respect for it, because you have to a lot of moving pieces, from the remodel to the finance to insurance, which is probably the hardest part of the transaction all of a sudden, where it used to be an afterthought. I mean, there's just a lot of moving pieces.
It's so funny you say that, because you would think that raising $4 million in 13 days would have been like the hard part, but that's like actually the fun part for us. And then insurance is like literally the headache right now.
You're banging your head against the wall.
That's the hardest part in our deals. It's not construction. It's not finding which loan we're going to go with. It's insurance. Yeah. It's so crazy.
One of the biggest lessons that I think I've learned in business, and you hit on too, like, your reputation is really your currency. And, brokers talk, lenders talk. I mean, sellers remember, how you handled the transaction, and relationships compound just like capital does. So I think there's a mindset shift that happens when you stop chasing deals and start building trust. And I think that's really when, like, the real opportunities start finding you.
No, I think that's really well said. Yeah. And let's be honest. I mean, this is a business that can be very lucrative, and people that get into it sometimes are looking at dollar signs, and they're not looking at the best interests of their client. My father, for 25 years, built up a business for retirement planning. And he, was a fee-based structure where, it's 1% of your portfolio. And he has always been about the client. And he's not churning stocks to make money. And he told me from an early age, he said, if you want to do well in this business, you're going to keep your nose clean. You're going to look out for the best interests of your client. And so, I think a lot of brokers, they just forget that fundamental idea of fiduciary interest.
Yes.
And then when you go that route, you can get yourself in trouble, and you can make some shortcuts, and in the short term, there can be some rewards, but really long term, it snowballs. And so we've all, seen the players that take that tack, and it's just not the best way to go.
I agree 100% because I feel like that in residential as well. Like, and I think that being a syndicator now, because I've always taken my fiduciary duty very seriously, that then it created the reputation and thus now raising money and having people invest with us, that has carried forward. Is that they're like, oh, okay, she is concerned about everyone and not just about herself. And so I think it's huge.
Where do you see so syndicators or buyers out here, specifically Ventura County? I know you did the deal in Camarillo, and there was some, I think it was a foreign buyer, or what's the buyer pool look like? Is it?
So I'd say there's a couple profile types. One is syndicator, like you
Okay.
guys.
Mm-hmm.
And I would say in Ventura County, there's really a small pool of people like you that have a recent active track record that are pulling these off.
Mm-hmm.
And when I say, I think that's probably a 20 to 75 unit range. So that's one. I don't really work with the institutional type buyers. I mean, there's REITs that are buying 200-300 unit apartment buildings with national brokers. I kind of stay out of that. So apart from syndicators, a lot of my buyers are still first time investors. They might be 35, 40, they're starting to now make some money
Mm-hmm.
and they want to buy a fourplex. And then that turns into the second type of buyer, which is a 1031 buyer.
Mhm.
Hey, Nick, I bought this fourplex through you. It was, 800,000. Now it's 1.2. Can I scale up? Because generally speaking, as you guys know, economies of scale, you get a lower price per unit. You get a better return on more units versus less. And so I've worked with a lot of people that have moved up on 1031s. Other people are just local Ventura County based investors that are buy and hold. I never sell. And so they're slowly building up 4, 6, 8, 10, 12 properties over time. And then I think our area is getting increased. We're on the map. Thousand Oaks, Ventura is seen as a value
For sure.
area. If you look coastal California, I think Ventura in specifically is a real value compared to anywhere from San Diego to San Francisco. If you look at Ventura, the fundamentals, quality of life, things like that. So to that point, LA buyers, San Francisco buyers, people out of the area now have
That's what I was
interest in this
wondering.
area.
I was wondering
Yeah.
if you get a lot of LA buyers
Yep.
because of how strict LA is being with all the tenant regulations. And so I was curious if they are
Well
looking to
said.
buy.
Yeah, we get people that say, hey, look, I sold my building in LA. The rent control is so bad. It's so
Yeah.
restrictive. I haven't had any rent increases since COVID. And they come up here. So
Yeah.
to that point. It was interesting. A couple of years ago, I sold, which to me was my biggest deal in my career. It was a 73 unit building in Camarillo. It was $23 million. A REIT ended up buying it.
Oh,
and,
okay.
and they called that property the donut hole, because this REIT literally owned 500 units surrounding this 73 unit
Wow.
building, and they were all built by the same developer. So they all basically looked the same. The first time I went to the property, I was looking at the wrong building because it was 7 buildings amongst 35.
Oh, wow.
So anyways, the REIT ended up buying it, but what was interesting was it was a mom and pop investor that had it forever. And like a lot of these deals, someone had passed, the children, were ready to cash out. And so turn the page, it goes from a mom and pop to more of a kind of a professional, national REIT-based company operator.
If we were at where we are now, we would have bought that building, because I think I remember a lot of it was vacant,
Yeah.
right? Wasn't a lot
Danny
of it
was
vacant?
telling me about it, and I was like, I don't think we're at 73 units yet. I love the idea of it, but I'm like, really?
Right?
And that was like the double black diamond acquisition.
100%. And I was
It's
like,
73 units. They had just before COVID hit, they decided to remodel because it was all original. So they had
Yes.
asked people to vacate. So they started to do this remodel, but they were in over their head. They were struggling with getting tradespeople out. COVID hit, nobody showed up. Things were standing still. So ultimately, at the time of sale, you had maybe a third of the units were remodeled, a third of the units were and occupied, a third of the units were original condition at well below market rents, and then a third of the units were in varying degrees of remodel. Some done, some barely done, but vacant. So, trying to get traditional financing
No way.
on
No way.
$25 million is not going to happen.
Yeah.
And so you're either cash or you're getting a bridge loan.
Yeah.
But that's a pretty big bridge loan and a lot of risk for that type of asset. So they ultimately paid cash.
Oh, I was going to ask. I was wondering.
But for guys, for groups like you that have access, like you do, to bridge financing, and you come in and in that 18 months, as I know you guys can do, and move quickly, turn the property around, and now it's suddenly worth, exorbitantly more, 50% more, and you put on long-term debt. So, I think it's a great model.
We're getting there.
Yeah. So let's switch gears a little bit. I want to talk about listing properties. I know you do a lot of that.
Mm-hmm.
On market versus market. Like, I noticed that a lot of your deals you list. And do you prefer listing versus off market? And it's kind of a two-part. Does the seller have usually a say in how they want it handled?
So I think the on-market, off-market thing is fascinating, and especially the fact that there's different platforms. There's a traditional MLS, and you've got LoopNet and CoStar and Crexi and these different things, and then you've got traditionally the commercial broker model, which is different from residential, which is a hot button for residential that local boards try and avoid. Is a 25-unit apartment building. I sign the listing today. It takes some time to market a property like that. There's a lot of analysis. You're looking at rent comps, sales comps, financial underwriting. You're getting aerial photography. So all that takes time to turn around. And I think in the commercial real estate model, it's, I'm going to shop this around for 2 weeks as a off-market deal before I bring it to market, so that I can show it to Danny, Marissa, GeoLiv Investments, the people that are capable of doing it. So for me particularly, I would say I do maybe 25% of my transactions are off market. 3 right now are in escrow. But if I'm a seller, if I'm selling a property, I want it marketed. I want more eyeballs on it. I want competition, because as we all know, the first 14 days a property is widely known. It's available. There's a scarcity. There's a demand. There's urgency. And that's where the competition is. And if you're a seller, that's usually my pitch, is if you want the highest and best price, or hey, if you think if you think what you're looking for is a little bit higher than I feel it's worth, okay, let's test the market. It's worth what the market will bear. So I do think that is a good strategy, especially now as I think the market has transitioned into a little bit more of a neutral or maybe even a buyer's market compared to what it's been for a long time now. Interest rates have gone up to the point where unless you have kind of that value add juice like you guys do, not everybody can make a deal work when the cost of money is maybe 150 basis points higher than the cap rate. I mean, that just shouldn't financially make sense.
Yeah. I know. We were hoping cap rates, adjust accordingly, but they haven't.
Do you see, because I've heard this too, like someone that's going to sell a property that, maybe they're like, okay, I have a price in mind. I don't want to list it. And do they not want to list it sometimes because they don't want to like scare the tenants, or is there?
I feel like, I'm sorry.
I know, I hear that.
Say the whole scare the tenants thing, like, because we get this in residential as well. And I'm like, scared of what? The rental market is so competitive. What are you scared of? Like, they're going to all move because you might be selling. Like, they're that attached to you personally as the owner. I just feel like I feel like that's a seller's excuse for wanting to not pick a listing agent and want to give it to multiple people, because, if they didn't, like our first syndication, we bought a guy who listed it and he represented us. He doesn't do commercial. Like, we would never list with him. So you've got this, and it's like, maybe they don't want to pick one person, but if you sold, like, say you sold us a building, we're going to list with you unless, the transaction didn't go well. That's who you're going to generally list with, I assume, kind of is your guys's.
Yeah. I mean, I think there's, I think, You're right. The rental market continues to be really strong. If someone
Yeah.
moves out, you're going to have a list of people to move in. But I do think that owners are concerned about property managers. Maybe you have a good
Oh,
on-site
maybe
manager.
that's what it is.
You have an on-site manager that's been there 20 years,
Mm.
and
Yeah.
you don't want them moving out because it's a 30-unit building. You need someone there keeping eyes and ears. Some people might have a friend. Their friend sells 1 or 2 buildings a year, and they don't want to hurt their feelings, or this other
Okay.
broker. And so, hey, bring me an offer.
Mm.
If you can show me the comps, show me that it's a fair price, I will sell. And so for whatever reason, I think there are still in our market, there's 25 to 30%, whether it's what I do or the market in general, that seems to be the trend, are off market. And a certain number of sellers, they say, I'm a seller, but you're not marketing my property. I don't want people walking around it, bugging people.
Mhm.
I don't want my property manager knowing. So bring me a deal if it works, great. If not, I think the other thing in our field, and you guys are both single family agents, and this probably affects you maybe more so than me, but we had this interesting major shift in our market as real estate agents where with a National Association of Realtors settlement,
Yes.
right?
Oh,
So
yeah.
Yep.
you now cannot offer a procuring agent a commission. So the old way on the MLS, it says we will offer 3% to the buyer agent on this transaction. We will offer 2%. We will offer 2.5%.
Right.
So the fact that that is gone, I think, will be a trend going forward where some agents might say, you know what, I don't need to pay a buyer agent a fee. And so I think that's going to give me more leverage to negotiate on an off-market basis. If, hey, Nick, bring me a deal. Sure, you can represent both sides, but,
I'm
you're
going to
going
pay
to
you
do it
2% or something.
at a low fee.
Yeah.
And I understand that, but I think the nice thing that it took me a while to understand, as a strategically how to work within that. And I think it's over time, it's pretty simple. I think if you are good at what you do, and if you're among the top in your field, it's easier to differentiate yourself. What is the value that you provide?
Right.
And if I can get you, a really strong price, my commission will be paid for. You will net a higher dollar and maybe worry
Yeah.
less about, what I get compensated versus if I earn the higher net proceeds that you get. And then the same thing goes, if you have a good buyer agent on the other end that can lead to that higher net for the seller, why are you worried about paying him a fee? And if the buyer has to come out of pocket for a higher expense of another 2.5% to pay that,
Yeah.
it's going to end up with the same net for the seller, but you're going to get a buyer that's going to say, I'm already stretching to come up with this down payment, and now I have to come up with a little bit
Yeah.
more out of pocket. So ultimately, not a lot has changed.
Well,
I'm curious
yeah.
what you guys are seeing.
No, I agree with that. And it's for me, like on the side of, being an agent and then also being a buyer, I just look at it like, you want me to buy your building at a 3 cap and then you want me to pay the commissions too? Like, I feel like there's such a disconnect right now in the market and it's the same thing in residential, in my opinion. Like when I take a listing on residential, I'm telling them, no, you still should offer a 2.5%, commission. At the lowest minimum, 2% if you're, really not going to. But because I just feel like that you want the top dollar in this interest rate market environment. And then you want the buyer who, especially in single family, who don't normally have a lot of cash besides their down payment, to come and pay their agent. I'm like, this is so silly. Like, you guys are not we're not in a distressed market where you're, selling below what you bought it for or even close to what you bought it for. And yeah, so
And
it's interesting.
that's why I enjoy commercial so much
Mm.
more, because it's a business transaction. The residential side, it's definitely more, I'm not paying that, buyer's commission because I learned that new law or whatever's going on. But in the commercial side, it's business, and it's
Yeah, but I feel like they're still even, like, because on that Ventura deal that we just wrote on, they wanted us to pay the commission to Nick. And I'm like, you're selling this at like a 3 cap.
yeah.
How does that, like, you're getting plenty of money.
Are you seeing that?
But I
mean,
think
'cause
it's
that one
because of the
was-
lawsuit. I think people feel like they don't see the value. And now that's like open door, let me negotiate. And no, why should I pay this buyer's agent?
And I think kind of on that subject, slightly different, the interesting trend is you're supposed to get a buyer agency form signed.
Yes.
Okay, hey, Marissa, do you want to work together? You're looking for a house. Okay, hey, you have to sign this form,
Yep.
and you're now committed to working for me at X%.
Yeah.
And what I think is fascinating about commercial real estate, which I actually really like, is if I ask GeoLiv Investments, your entity, hey, you guys, sign this buyer rep form for the next 6 months so that any apartment building
Yeah.
you buy, you're going to work with me at X%.
Yeah.
You're going to laugh. You're going to say, Nick, you don't understand our business model.
Yeah.
I understand that you guys are going to get calls from 10, 20 different brokers. Why? Because you're some of the most active, adept people at putting these deals together. And that's the way it should be. And you work with who picked up the phone and had the lead and had the expertise to deliver it to
Right.
you. And so, that's worked fine for me. I know newer people in the industry really struggle with it because it's, again, that value proposition. Why work with me? Why commit to me? Whereas I've sort of decided it's basically, hey, I've got market share. I have contacts, whether it's a lot of apartment owners or brokers. So if you want the best chance of buying a building in Ventura County, you're going to work with me, and I'm not going to commit to you and make you sign something, but I'm confident that I'll be able to bring something to you that you'll be able to buy. I'm curious what you guys are seeing in residential, because it's very competitive, and I'm sure there's a lot of people that anybody knows 6 or 8 friends that have a license to sell one house every 5 years.
Yeah, no, it's true. I mean, and it's shocking when you look at like the top 100 agents in Conejo Valley. So in Conejo Valley, in the top 100, the lowest person, that 100th person, is selling 10 houses a year. You go over to Simi Moore Park, that person's selling 2 houses a year. So like there's only a handful of agents that are doing the majority of the transactions. And but like people don't look at selling their home as their largest financial purchase and asset that they deal with in life. They will give it to just whoever their friend is, or my mom's friend, and they may not have sold a house in a year or two. Most agents don't. I mean, 20% of agents will not sell a house at all in a year. And and I do think it's interesting because in commercial, and residential, like we're fiduciaries, right? But yet I need to talk to you first, to a buyer, about what you're going to pay me before finding you the right home or the right building.
It makes it inherently a really awkward conversation.
I was like, this makes no sense.
You meet with somebody at Starbucks for the first time, and you're like, hey, so sign this paper.
Yeah.
You're going to pay me this amount. And they're like, well, you haven't even done anything for me.
Yeah.
All we've talked about is our kids and like a couple of houses I want to see. Like, I'm not going to commit to you yet. Yeah.
And like, you're not supposed to even go show them the house without it signed. But I didn't even think about it in commercial because if you guys came at us and we're like, oh, well, you have to sign with us, anything, and you're supposed to put like the area,
So I think a perfect example of this is we're all working on a deal together, not far from the studio, an apartment building, came on the market, and you guys said, oh, this is great. I want to make an offer. And I said, great. I'm going to send you the offer. And you said, Nick, there's this buyer agency commission on here that we, as the buyers, are going to pay. And what did you say? How did that conversation go?
I said, love you, but I hope that the seller will be paying this because I'm not paying 2.5%, even though I'm a licensed
and what did I say?
You said, no, don't worry, we're going to have the seller.
Right.
Like,
and that's I think the way people need to operate. I'm not saying that you basically it's sort of a rolling thing where you have to adapt to it. But again, I think the point is it's client centric. It's like, hey, I found a great deal for you. If the seller's willing to pay this, great. If not, I don't want you to pay the fee. I want this to work out the best for you to get the leverage for your money.
Yeah.
Yeah.
So let's switch gears a little bit here and talk a little bit about our market. What are you seeing right now for cap rates, like Thousand Oaks, Ventura, Oxnard? What are things selling at right now?
Right. So like you were saying a second ago, I'm shocked. I would have thought cap rates now would be at 6.5%.
Yeah.
Cost of money the last year or so has been hovering around 6.5% for a 5 to 10 year apartment loan. So it stands to reason that a cap rate would be at or above that. I think what's unique about our market is we have very little turnover. We have maybe 30 apartment buildings in the county of Ventura, trade hands a year, 30 to 35.
Wow.
So it's, and there's a lot of appetite, like we talked about. There's local buyers, but there's also out of area.
Mhm.
And there's been scarcity. I think now there's about 40 properties on the market for sale, 40 to 45 in the county. 2 years ago, it was as low as about 25. So the scarcity is there. Cap rates, quite simply, I would say it's sort of by market. So East Ventura County is very rare, as we all know. If you see something in Thousand Oaks, if you see something in Simi, Camarillo, jump on it. Because if it's 20 to 50 units, you might see one, maybe two of those a year.
Yeah.
Wow.
I was going to say, because it's usually bigger buildings.
It's usually bigger
100 plus.
buildings. And an interesting thing is, too, the bigger buildings actually, when I say bigger, we're talking probably 100 plus.
Yeah.
And these are buildings that have workout rooms and swimming pools.
Mhm.
Yeah.
And these are professionally managed by national companies that use algorithms to change the asking rent every day. So they get some of the highest rents. And so these properties sell for a 5 cap rate, maybe a 4.5 cap rate, but they're selling for 400,000 to 500,000 per unit in Thousand Oaks, say. The opportunity that I think you guys have hit on is there's the market where you're not 100 plus units and you're not sort of quite a mom and pop buying 4 to 10 units, but there's this middle ground of 20 to 50 units where you can buy a 1970s building that's like a class C plus, class B minus, and you can go in, you can do the landscaping, you can paint, you can, put in quartz counters and make it really nice and charge maybe 10% less than what that Class A 150 unit building is charging, which a lot of tenants don't frankly want to live at because it's
too big.
Feels too big.
Yeah.
But cap rates in general, I would say maybe have gone up 50, 75 basis points in the last 2 years, which is not a huge jump. So on average, I think, say Oxnard now is 5.25 to 5.5 cap rate. Ventura is pretty consistently a 5% cap rate market. Same with TO. Santa Paula, as you both know, I own 2 fourplexes there. We did a deal together last year. You guys have done several deals. I think that's been an area of a lot of opportunity.
Me too.
I'm seeing cap rates there now at 6%. So there's a better return in an area that doesn't have rent control. I would argue has some benefits over Oxnard where there is rent control, bigger city, maybe some more crime. And so some of these tertiary markets have, to me, been a really smart place to invest because you're now seeing the rent delta between a Ventura and a Santa Paula get smaller. Because people are saying, I'll move 10 miles east and it's a little more affordable, but because enough of that has happened and there's a scarcity of rental housing that delta has gotten smaller.
And we're value add players. That's what we focus on. What other buyers or strategies are you seeing in Ventura County?
Who's going to be buying our syndications when they're ready to sell?
Right. So, I mean, I think, should you sell this property, say you're selling it in 5 to 10 years, there are family trusts and maybe not quite REITs, but partnerships that actually look to buy not the value add deal, but the done deal that's stabilized, that is nice real estate to own, that's sort of a blue chip deal that they can hold on to. So case in point, actually, there was not quite similar, but there was a 50-unit building in Thousand Oaks recently that sold. And this was by a group, I think they're based in maybe the Bay Area. But anyway, the point being is that one is probably more of a value add play, but by the same token, I've also seen them buy finished quality real estate with in-place rents. So not everybody wants to put in $1.5 million in remodel and go through the headaches and the gray hair and the wrinkles that you guys are going to get over the next 1.5 years. Some say,
oh gosh, thank God for
that.
hair dye. Yeah.
I want to get to the point where I don't have to do that. Trust me, it's a lot. Eventually I want to have, 2 or 3 just beautiful Class
Like
A.
trophy properties.
Yeah, I want some trophy properties, but
One day, honey, one day.
right now it's the grind. I mean,
Yeah.
that's what we have to do, and yeah, it is causing gray and wrinkles and all that.
And whoever says that's a passive investment buying
Oh my
multifamily real
gosh.
estate, it couldn't be farther from the truth.
I
Oh my
love
God.
that. I know. I love the like certain people who don't want to invest with us, and they'll be like, "No, I want to do it myself," and this and that, and I'm like, "Yeah, but like you work full time.
How many people have actually done that you've talked to?
They're still looking."
It's 0.
Yeah, no, it is.
We get that a lot. Oh, why would I give you the money? I'll buy my own.
Yeah, I'm
I
gonna
get
do it my
people
own.
that
Okay, so I wanted to speak to that.
Yeah.
I think so. The niche that you guys serve is really important to me because it's almost like you're selling a stock. It's like if I want to buy a REIT, if I want to buy a piece of a large apartment building, you guys offer that in a little different format. It's, hey, I looked at buying this fourplex. Okay, let me look at this. It's actually a 4.5% cap rate. It's $1,250,000. It's in Santa Paula. I have to put $300,000 down, and I did the numbers, and I'm breaking even. Actually, you know what?
Yeah.
I might be negative.
Yeah.
So I'm going to put in $300,000 that I've saved and I've worked at, and I'm ready to deploy. I'm scared of the stock market. It's too crazy. This doesn't make any freaking sense.
Yeah.
And alternatively, and I can speak to this because the deal that we're working on together, I see the value in it, and I'm investing some of my own money into it because I don't want to deal with it. and I can't get the return on another building.
Yeah.
Yeah.
It's
the
hard.
last building I bought 2 buildings in Santa Paula, $1 million each, that a client of mine was in escrow to buy. He was a syndicator. He wasn't ready to go. He had some clients that dropped out. And so anyways, I stepped in, I bought it. It worked out amazing. But they were each $1 million. They were all 3 bedrooms. It came in at 6% cap off the beginning, and I got 3.5% 30-year money. So that's like set it, forget it.
Oh,
boom.
yeah.
A plus investment. Since then, I've been looking. I've been fortunate enough to have some commission money set aside. I'm churning, doing some short-term notes, doing some like online savings, some treasuries, whatever. I'm waiting to buy. I want the opportunity. I just haven't seen much.
Yeah.
Myself, if I had the ability to buy $5 million properties, then I would. But for me to buy $1 to $2 million where I'm looking at,
It's hard.
it hasn't made sense. So what have I done? There's another syndicator. I've put $50,000, $75,000 in Lompoc. Then the same thing in Carpinteria. Then the same thing in San Luis Obispo.
Yeah.
Now I'm doing it with you guys in Thousand Oaks.
Yeah.
And so I directly am one of your biggest fans because, you guys offer something that I can't get on my own. And so for the average investor, everybody wants to invest in real estate, but not everybody can do it. And not everybody can find a way to make sense of the returns. But if
100%.
you guys can leverage your ability to get that return, then like I said, that's a lot of value.
Yeah, I think so. And a lot of our investors who invest with us recognize that. And they're like, oh, yeah, no, I don't actually want to deal with everything. But you know what I say to them, like, it's great because you can drive by a building and show your kids, hey, I own that building.
Exactly.
And, you open up your children to like that idea of, wow, like you own that. I remember our kids when we bought our first building and they were like, so we have 7 other houses we can move into. And I was like, hopefully not ever, but I guess technically we could if we had to.
I can get you a nice 2-bedroom right now.
Yeah.
Oh, gosh. But yeah, so I think it is like a huge value. And that was really when we bought the first building, how this kind of all came about was because people were like, well, we want to invest with you too, but they didn't have $250,000 to invest. And so we could just do a joint venture. And that was really why we figured out and hired Vinny to be our coach and show us, okay, how do you do these syndications? We have people who want to invest with us, who trust us, but we don't want to like screw this up.
And nobody knows how hard it really is, even to get a deal in escrow.
Yeah.
I mean, if one of our friends comes to you, they don't know you, and they're like, I've never bought a deal, you're probably like number 45 on the list that you're going to show.
Well, he's got 700. You're probably like 695.
Right? That's what I'm saying is like people they don't understand. Like, yeah, of course, everyone wants their own 4-plex, own 8-plex. but you got to put in the work to figure it out.
Yep.
Right.
And it's a lot of work. It's not passive. It's not like the stock market. It's not like investing in a REIT, which REITs, by the way, blow my mind because I just recently was looking at a REIT and their private placement memorandum and the fees. Holy moly. I was like, Danny, we are charging nothing compared to these people.
They were charging 10% for construction management
On top.
And they do full development. That's all it is. It's ground up.
Yeah.
I haven't charged anything for any of the construction management, which is changing. We're going to do 3% on, not even on TO because we already did it. But our next deal, I am.
And then they charge their asset management fee is 1%, but it's 1% of market value of the property.
Oh, well, that's pretty different.
That
doesn't add up.
Totally different than 2% of,
actual.
Yeah, net or net income.
Right.
I mean, our asset management fee is not based off of the value of the building or what we bought it for. It's based off of the income produced. And so I was just like, holy moly.
Yeah.
Like, it's so crazy to me. So it's like, yeah, you can invest in those things. And that's where I realized why they have the fancy office and all the staff.
So I'm curious to put this back on you guys.
Yeah.
So how long have you been syndicating now from your first investment to now? And I'm curious, I think I know, but I probably don't. What are some of the challenges from the first couple syndications you did up into where you're at now?
What we bought, our first syndication, Yale, was
August 29th of 2022.
Yeah, not even 3 years ago.
3 years ago.
Yeah.
And how many units was that?
6.
6.
And we added 2 ADUs to it and a laundry room. And we had to evict all the tenants because it was in such bad... It was literally probably one of the worst properties in Santa Paula. Like the guy who owns... Because it's right behind Main Street. And the gentleman who owns... It's like a sports bar. We were in there and we were like eating or what have you. And we're like, yeah, we just... And he's like, that building looks amazing. Like, thank you. I mean, it was a really... I love showing the videos of it. It was so bad. And now you see it and it's so cute. And our tenants are so proud of where they live. They love it. Some of my favorite tenants live there.
That's great.
Yeah. But I would say the challenges,
they evolve. In the beginning,
yeah, they do evolve.
In the beginning, it was like, I think raising money was like a stress point when we, because...
Well, the first one we funded ourselves.
Oh, yeah.
We actually closed on that with our own money and then had people fund into it and fund us back. And we actually didn't get all our money back out of it because when we went to refinance, because it's a small deal, we had to own 51% of it. So we had to leave an extra $100,000 in the deal that we didn't plan on leaving in it. So we're one of the largest LPs on it. It all worked out. It's totally fine. But there was things like that where, I wasn't planning on leaving being a $200,000 LP on this.
I think a challenge is because, these are competitive deals when they come out. think of TO, it's competitive. Like you got to go in aggressive. So the timelines that we have to put, I would love a, 60 or 75-day loan. No one's going for that.
It's not competitive.
No.
You can't do it if you want the deal.
So that's the challenge is like, okay, you got a deal. Okay, now we got to, perform. We got to, we got to we got to start the PPM. We got to build the pitch deck. And that all has to come together like fast. Right.
Yeah.
And you got to get everything done. And then you got to raise money within, 2-3 weeks. So in the beginning, I was so stressed out over raising money. It was like, now it's still stressful, but it's a little bit easier.
Yeah.
Building the reputation.
I don't know. I always say that Danny, like when we're raising money, he's like having a personal trainer show up at your door at 5 a.m. He's like, so what have you done today? Who have you called? Who have you texted? Marissa, are you working on this yet? And I'm like, well, I'm just working on a few other things, like maybe getting the loan, the other 75% or 70% of money that we need. And yes, I'm going to send it out. And he is, and he doesn't just grind me, he grinds our other GPs too. Like, hey, do I need to call him? Like, am I going to have to bring in another GP? Are you going to perform? And it's like, so the pressure, and I know that pressure is actually inside of him and he's just verbalizing it to all of us. But I'm like, okay.
You got to do it though. You got to do it because, when we put these deals together, it's Marissa and I. And then we really just bring on a capital raiser or capital raisers, and that's their job, right? And then I tell them they have the most cake job in the universe. You get to be a general partner on this deal, and you have to do 2 months worth of work. I start off, I do my 2 months worth of work, and then I have another 5 years to do. They don't do anything outside of that, really.
Are you looking for any capital general partners on your
Yeah,
next
we
deal?
are.
No,
we always are.
yeah.
Always. That's
No,
what we
I'm
say.
serious.
Yeah.
Quite seriously though, because I
Yeah.
have clients that might want to just go boom, 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 boom
Yeah.
instead of taking on one property themselves.
Yeah, Danny finally made, which is great. He made like a roles and responsibilities sheet. And then he put like our names next to what we do and then like what the other GP. And I was like,
How many pages do we need for us?
yeah. I'm
Yeah.
like, okay, so there's like us with like 2 pages worth. And then there's 2 slots where the other GPs are. I'm like,
Yeah.
holy crap. When you look at it like that, you like forget how much you do because you're just in it and doing it. But yeah, I was like, this is pretty like a nice opportunity for someone to come in.
And then, we all know insurance.
That's the
Ugh.
number one right
Insurance is
That's-
tough.
That's been our biggest learning hurdle, I will say,
On
on this transaction. The one we bought in Oxnard, Edgewood, we weren't using bridge lenders as much. We were trying to use more like, I don't know, I guess, or like a Fannie Mae, Freddie Mac, kind of not quite their product, but we'll go into it. So like we did Greystone with Harvard, and then this one we were trying to use Corvest, and then they start, they're from New York. They don't understand our eviction laws. They don't get it. They get like really nervous, and then had to flip to a true, more hard money lender, which is what I like to deal with because the interest rate difference really doesn't make that big of a difference when you're factoring out your IRR for investors. So I'm like, I'd rather deal with someone who's going to be more fluid and understands what it's like, what we're doing.
Mhm.
But then on this one, it's been insurance, like, okay, we have this person and we're getting insurance quotes through that. And then you're learning, well, because this building is across the intersection from wide open space.
Wildland.
Yeah, the brush fire risk. So it's been interesting because then it's like there's a whole nother submarket that I didn't even know about that is for these type of buildings. And so that has been like, okay, who do you go to for that? And, now the lenders, I feel like we kind of have that down more. And now it's finalizing those insurance guys of like, and it's just connections, getting them from lenders or from commercial brokers who they use and who their clients are using. And then getting exposure to that because you don't have that exposure when you're first starting out. You don't know what you don't know.
And it's evolving so quickly.
Oh my
and there
gosh.
was signs that it might get better. And
Yeah.
then Palisades fire
Yeah.
comes and Altadena. It's like now we're
Yeah.
back
Holy.
way worse than we were.
Yeah.
Oh,
we're-
yeah.
I think for me as a broker, my biggest challenge is the typical building I sell is 1960s, 1970s with an original electrical panel that's Zinsco or Federal Pacific, and that's on the list. The
Yep.
insurance companies don't want anything to do with that. And so when you become aware that this is in place, this is one of the things I literally do is I go to the apartment building I'm going to list. I'm walking around it, getting a feel for it, taking notes, understanding the condition. I go to the panel and I open it up. I'm like, this could determine the next 6 months of my life in
Yep.
terms of marketing this property and seeing it to close. And then what's unclear, it's hard to know how to navigate this stuff is some of these insurance companies, like you found, will say, we want nothing to do it.
Yeah.
We're not insuring it. Or we're going to insure it at 3X or 4X of what the current policy is. Or you have to get it done within a specific period of time. And in my understanding, you guys have better understanding than I do, but you can't replace a main electrical panel overnight. It's
No.
not like popping in a sub panel
No.
from Lowe's.
No, you got to get Edison.
Especially because of
Yeah.
COVID. We had that issue, remember, on, I forgot what building it was. We had to replace the panel and we were waiting for parts and then we ended up getting a refurbished part.
Oh yeah, the panel. Yeah.
That was
parts
on
is the-
Main Street. Yeah, because there was the whole supply chain issues from COVID. So it was like,
Yeah, getting panel parts.
How
But
long do you think that realistically would take?
it took us
To
like a
replace.
year to get
A
all that
year.
replaced.
And is the insurance company saying we're going to drop you unless you show proof of replacing this within a year?
Are-
Are you seeing that?
Well, on this building particular.
are you talking about Acacia?
No. Oh, Acacia's a whole nother
Oh,
one.
no.
A whole nother issue with the electrical panels. No, on Herbs, actually, the issue is more the fire score.
Yeah, you would think so.
Yeah.
Edgewood,
Yeah.
you would think, the same carrier's going to do this one. They won't do TO because of the fire score.
Yeah.
It's strictly the fire score.
Yeah.
That's what we're hearing more of. It's not actually that it's a 1963 building with original panels. It's more now the proximity to the open space.
We're looking at a policy, and I don't have a problem with it. It sounds crazy, but we're getting a fire policy with a $500,000 deductible.
For wildfire only. Not for regular fire.
I'm not investing anymore.
Yeah. Looks like I'm out. Well,
Yeah.
that is just the first policy that has like been brought to us. And we're even seeing if the lender will even, I mean, we're going to have so much cash sitting there at that time, but this other guy is still looking and hopefully we'll have something.
And does
Fire
that,
that.
so what you're saying though is it doesn't, because my example was more like your building's run down, you have all
Yeah.
these systems you need to replace. Once that's done, then we'll talk to you. But you're saying because it's next to open space that
That's
whether
the
you
issue
improve
right
the
now.
building or not, it's not going away.
No, but if
well-
they will, that's the thing. The brokers are saying, hey, if you do the panels and you got the roof that's already done and then you do the HVAC, there's going to be more people that are going to look at it, right? So it's not like this just blanket. There's these carriers that are more fluid and flexible and stuff like that. So
I think it's just because of Altadena and Palisades
Yeah,
just
it's the-
happening.
just happened.
People are like,
Yeah.
just like, whoa, like, I don't know. Let
Yeah.
me see. So
Um,
hopefully as time goes on and we do all those things, there'll be more opportunities.
That's the number one deal. In the last 4 transactions I've done,
is
you complete the due diligence, repair request comes, and it's, the panel. We need a credit for the panel. So
Yeah.
I'm seeing that every single
Yeah.
deal.
Yeah.
and we and you would think it's funny like that if you look back like 3 years ago, oh, what's your biggest hurdle? We're in 2025. Oh, insurance. Like you wouldn't even think like that's gonna be your
No, you literally used to
No.
do it 10 days before close.
Yeah.
Yes.
Pick up the phone and they're
No.
like, yeah, done.
So
Yeah.
our next one, we're writing in something with insurance because it's just that has caused us the most stress on this deal.
Yeah, it really. I mean,
Yeah.
I think we're getting better, and that comes with time too. I think we're getting better people to reach out to for things that are
Yeah.
giving us hopefully finding us product that will work with the fire. But yeah, I didn't think about it. Ventura is another area that's all considered high fire because of Woolsey, or Thomas Fire.
It's
I mean.
2 miles within wildland. That's what they're saying. It's
Yeah,
like kind
so
of
like Oxnard.
So
has-
so is that's most of Ventura now?
I know.
Right?
Oxnard, I
saying the
guess,
whole
is not.
So Oxnard is like the spot. It's Santa Paula. I mean, luckily we got in. We have farmers insurance out there on a lot of our buildings.
Because they're 70. If it's 74 or newer, then farmers will look at it.
Yeah,
So,
but yeah, so that is.
yeah.
Ay.
But we could keep probably talking for like 4 hours on
This
this.
is great. No,
So-
I'm enjoying this.
But I do want to finish with
Yeah.
this.
Okay.
We do this closing. We do the final 5. So we had a couple questions we want to
Mhm.
ask you. So what's one mistake you see investors make again and again?
Not understanding the numbers and staying true to the numbers,
Mhm.
right? Like we're not buying and selling houses. It's not about an emotional attachment. You're buying an apartment building because of the numbers. And so if someone goes in and they don't have the proper experience and they say, I want to make something beautiful that I can show my friends, and they put 3 times their budget into the property.
Oh.
I'm dealing with a lady right now, and I said, I'm sorry, I can't help you. It's not worth what you put into it. You didn't, you know what I
Mhm.
mean? So that I think is the biggest one.
Yeah. No,
Yeah.
for sure. And she's our numbers gal. So
Yeah, I'm always like, what do you mean? How'd you get? I'm like, I swear we started out at
Yeah.
35 grand a unit, and now it's costing 50 grand a unit. I'm like, what is going on over here?
yeah.
Yeah.
But everything's going up, so
Yeah.
it's
true.
not easy to
And
calculate.
that's one thing we pride ourselves on at GeoLiv is conservative underwriting. Like
Yeah.
we don't put, and that's, for anybody out there, if you're putting the max what you think you can get for rent, you're putting the max what you think you can get for rubs and this and that, you're starting off wrong. You got to be below, because things happen. Insurance costs more. Construction is going to cost more. You got to be conservative, and that's what
Yeah.
all of our deal, like all the deals that we are doing, they every single time it's always, we thought rent would be $2,400, we're getting $2,600. Like we always try to stay low, because if it can make sense at that, then
So you're saying those broker marketing packages that come over your desk, they're low, they're not accurate?
we love them, but we do our own due diligence too.
I always
Smart.
pull my own rent.
So
Yeah.
if you had to start your real estate career over today, what would you do differently?
Ooh, not start at the time that I did,
Right?
and
Yep.
start at the time I did because
Yeah.
I have a higher standard of living now than I did when I was 25 when I
Yeah.
got in this business. But fortunately, I'm married to. She's no longer a nurse, but she retired shortly after COVID. But she was an ER nurse for 12 years, my wife, and great benefits and a stable paycheck.
Yep.
And we knew it was going to happen. Whereas, I'm coming home, hey, I got a big commission check. And then 4 months later, she's like, so are you going to get another one?
Yeah, I know.
So I think it's understanding in this business that there's highs and lows. But when it's high, don't spend like it's going to stay that way.
Yeah.
And when it's low, just live a little bit more efficiently. And
Yeah.
then when something turns around, then don't, buy the new $90,000 car. Like put something away, buy, invest with GeoLiv and get
Yeah.
some passive income.
Yeah.
Because I think the biggest mistake actually that real estate agents do is, they might be making $500,000 a year in commission. And then like 10 years later, you're like, where did it go?
Yeah.
I see that you have a flashy car and you dress
Yeah.
nice and you go to all the Laker games, but invest in real estate because it's the best in multifamily. Everyone needs a roof over their head. There's
Yep.
low vacancy rates. Rents continue to go. Despite all these challenges, it continues to be the best, in my opinion, form of long-term investment that you can do.
Yeah.
And if you do it right, you can get not necessarily passive, but you can get cash flow. And then long-term, you can get equity appreciation. And if you're 65, 75, like the three of us at this table are going to be one day, and we're going to look back and say, man, I'm glad
Yeah.
that I did that.
Yeah.
Yeah. No, for
No,
sure.
that's huge.
That's so funny that Nick also married for stable income and benefits.
Yeah. I'm still.
And then they're stuck with two real estate people who are like, yeah, my income's here and there.
Yeah.
And like, yeah,
Yep.
it's so funny.
December, I'm pulling the plug.
Are you?
Yeah.
That's a big deal.
Yeah. So
Yeah.
another reason to start investing in real estate, that it even though like Nick said, it's not passive, but it does bring in.
I don't know if you're going to be as universally loved as an investor compared to a fireman, but you're willing to give up that for maybe some higher income ceiling.
That's true. That's true. Okay, so you kind of touched on it, but what is one market or asset class you'd bet on the next 5 years?
Multifamily in Ventura County, hands down. It's gotten harder. There's more competition, but if you stick to fundamentals and you have a plan and you know the numbers, there's opportunity.
Yep.
Yeah, for sure.
We're with you on that.
I agree.
But don't tell
100%.
anybody else.
No, we won't. We won't share this to the world. What is one daily habit that has made a big difference in your success?
Exercise.
That's so funny. That's
I could
us.
say cold calling. I could say,
Yeah.
but my wife knows it. She'll look at me and she'll say, like, if you don't go surfing or mountain biking or hiking or running or do something, I don't want to be around you. And so for me, I have to do that or I can't focus.
Yeah.
And so as soon as I think you guys are pretty active people and health is first.
Yeah.
Yeah.
It's funny when you talk to top performers across the industry, the difference is rarely like some big strategy or something. It really just comes down to something simple of daily consistency and, doing what others won't and just stacking that. Like that is, to me, what it really comes down to.
Yeah. If I don't work out, you don't want to be around me.
Yeah. No,
well,
I
it
mean,
just helps you like manage your like anxiety.
yeah.
100%.
This job's stressful and it's not for everybody.
Yeah.
It's really not.
Yeah.
And there's no better way to release that stress.
100%. And gives you more patience. Yeah. I feel like it's
all right.
huge.
And the last question we got for you, Nick, is what's one piece of advice you'd give to a new real estate investor today?
To be prepared to say no to the first 19 deals before you say yes to number 20. I've been told, I think this is always good advice. There's good deals in down markets. I think that's the other way. There's good deals in sort of overinflated markets. There's bad deals in opportunistic markets. So I think the lesson is educate yourself first, look at property. Don't just look behind your computer. Go out and walk it, understand it. I'm in real estate and I'm not selling stocks and bonds because I like to go walk it.
Yep. I
Yeah.
want
And
tangible.
You can see it and understand
Yeah.
it. And once you understand the numbers and you understand the market, then you're ready.
Yeah.
But
Yeah.
until those two things happen, you should just watch and
Yeah.
sit on the sidelines.
Yeah.
No, that's
That's-
really good advice.
Great points.
So thank you so much for joining us
Yeah.
today. I and Marissa, I'm sure feel the same, very much value our relationship, meeting and working together over these last few years. I'm like, eventually we're going to put a deal together, and we finally did last
Right.
year. Now we got another one. So, and I know we'll keep doing it. And it's like you said, it's really like who you work with matters, right? So, being able to work with you, one of the top brokers, but it's not just that you're a top broker. I mean, you're just fun and easy to get along with, very knowledgeable of the market, and you add tons of value. And, that's the key to the game. So,
Yeah, no, I appreciate you guys saying
Yeah.
that and having me on.
Yeah.
And this has been a fun conversation.
Yeah.
I could do this for another hour.
Yeah.
But I think there's going to be more opportunity to work together.
Yeah, definitely. We
So-
definitely need to buy a couple more buildings by the end of the year.
So, Nick, thanks again for joining us. If you are interested in investing in Ventura County or just trying to understand what makes a top broker tick, I hope you enjoyed this episode and gave you some real insight and real value. If you're enjoying Ladders and Leverage, make sure you subscribe so you don't miss future episodes. We'll see you next time.